Welcome to the Cattle Talk Podcast, your weekly breakdown of cattle market fundamentals, key news, and the insights shaping the industry. Trading commodity futures and options involves substantial risk of loss and is not suitable for all investors.
Welcome into the Cattle Talk Podcast. This is Lucas Peters filling in for Mike Miner today. Today is August 21st, and I got Nick Bork in the ProAg studios today. How are we doing this Friday, Nick?
I'm doing really well. Thanks for having me on, Lucas.
Well, I really like your taste in shirts today, Nick. I'm glad we're matching shirts, but getting on to a few more serious topics here. This cattle market continues to offer a lot of excitement in various levels. So we're going to kind of step through a few different items today. First thing first, kind of a review on what went on in the futures market here this week. Last week, of course, was a pretty ugly week when we looked at live cattle futures and feeder cattle futures for that matter. This week, a little bit quieter overall as we end the week. Right, Nick?
Yeah, well, we ended the week quiet. Like it was pretty flat week over week on what the price actually did. But it was certainly a wild ride in between there, right? Like, I mean, you'd look at the market and we'd be down today, for example, down $4 for a while, and pretty soon we're green and deferred. So definitely a pretty wide trading range again this week. You know, we were up in the low 220s and then down in the close to the low, under the 214, 215 area. So it definitely was a wild ride, but week over week, it doesn't look like it did much.
Yep, and after the open this morning, we're going to take that as a win. How about cash? Any reports cash out there in the countryside, Nick?
Yeah, so they did buy, Packers bought a fair amount of cattle earlier in the week at lower money, which was a little bit surprising, but basis was positive. And I think with everything going on, and as you guys well discussed last week, this leverage shift, there's been some willing sellers, so they were able to buy some lower. Now today, cash, and I think a lot of that trade was in that 223, 224 area. Earlier, even on Wednesday. So, but now today, cash bids out there up to 226, and not a lot of willing sellers. I think the cattle that were available got bought, and now everybody's kind of digging their heels in again. But that 226 bid out there is also, I think, what turned the board around today.
Yeah, that's a good point. That's kind of a little bit slower people to pull a trigger on the sales, and hopefully that helped us rebound. And it did help us rebound on the futures today versus where we opened at. This afternoon, we did have a cattle on feed report come out. That was probably the least exciting news of the day, as we'll get into here a little bit. Most of everything was pretty much right on estimates on the cattle on feed, or what was your takes on that information here?
Yeah, there's just so much going on in the cattle market right now. It's hard to think that this cattle on feed report has much influence, but the numbers still are important, right? Like they reported 102.5% on feed right now, so 2.5% more cattle on feed than a year ago, and that was right even with the estimate. But that certainly as we've made cattle bigger and marketing's down substantially for the month of July, and also placements down, that's how we're getting to this 2.5% higher than a year ago. Placements was the friendly number in the report. The estimate, I think, was for around 93.5%, and that came in at 89. So that was a substantial decrease from what they were thinking we placed. Marketings was right in line with the estimate. If anything, we'd call this report slightly friendly with that placement number coming in at 89.
Sounds good. So, you mentioned the craziness in the cattle market, and, we look back at last week, and last week it was the Tyson announcement and the closures, and then trying to figure out what all that meant, and the board's reaction with that, and maybe even some kind of forward looking into it. And everything was relatively quiet this week until this morning. I know when we got into our early meeting, we start hearing about this and seeing the information on Trump's Truth Social post there about waiving some tariffs on ground beef. Give us a quick summary of the message that Trump sent out and what it kind of what it meant as we looked at it through the day here, Nick.
Yeah, the announcement was that he is going to reduce tariffs on 300,000 tons of beef, and also price that beef at a 25% discount to the market, and that'd be on ground beef. So that is the domestic demand. That equates that tonnage equates to about a week and a half's worth of our harvest, of our cattle harvest. So it's a big number. It's a big deal. And then, of course, this is all ground beef, right? So it's actually, when you look at just, the U.S. ground beef consumption, it's actually about 3 weeks worth of our supply. And then, and that's on an annualized number. And this beef is all going to come over the course of 90 days. So you're going to take in 3 weeks worth of an annualized number within 90 days. That's a lot of beef to come in all at one shot. That's why the futures market was getting beat up pretty hard this morning. It definitely was a bearish announcement to beef and cattle, but we rebounded well. And like I said earlier, I think that cash market sparked it a bit. We're going to have to see how this all goes, if that's even really possible to get that kind of number, into the country over the next 90 days, but it definitely is creating some concern.
Yeah, you bring up a good point of you. It's one thing to put a number out on a tweet, and then now it's the follow up to make sure it gets done. Like we've seen that on many things. However, if you are waiving tariffs, I bet there are a lot of willing sellers out there in the world that are kind of saying, "Hey, here's our chance to sell beef into the U.S. A little higher dollar amount than they're probably receiving in their home country." So this is one of those, unfortunately for the producer, that might actually get done. And so I know last week on the Cattle Podcast, and something we've talked a lot about in the office, and this message this morning kind of continued this momentum we have on the packer side of the leverage equation, right? It seems like for the longest time it was the opposite. The producer probably had more leverage, and now we've seen a relatively short time period here. The packer has a leverage now. That kind of continued again this week with this announcement. Nick, what else are your thoughts on that?
Well, yeah, I mean, I know you guys talked a lot about it last week. The leverage has shifted, but the whole thing is really snowballing, right? I mean, before all this, funds were quite long. They weren't record long, but you start to incorporate all this news that's coming at the cattle market, heavyweights and plant losses, and now we're importing way more beef, and that snowball effect is going to get the funds out. Or at least it looks like that, they're going to be running for the door, and that's when you really start to take this market lower. And we saw it all this week, right? I mean, the cattle market would open $1 or $2 higher, and within a couple hours we were $2 lower, and that most of the week that's where we closed. Now again, we ended up being fairly close to where we closed last week, but this snowball effect, we've seen it in past cycles where once it gets going, it we're not exactly sure where this thing kind of will bottom out seasonally, but when we got all these heavy cattle around us going into fall, and then these loss of these plants, which we're buying a high percentage of negotiated cattle, the writing's kind of on the wall there.
Yep. No, you bring up a lot of good points, Nick, and I think it reiterates for a lot of our producers, you never know when the next news is going to drop, right? And so we're with Pro Ag Marketing, working with guys like Nick to make sure you have a plan in place so that when these news events hit, you aren't woke up with a giant surprise or a bad feeling in your stomach because you didn't have a plan in place. I think it also goes to show the importance of having an LRP or an LGM policy in place, right? A lot of these news events are coming out after market hours, and sometimes that is a nice opportunity to use those insurance products when the market isn't open. Like I said, doesn't mean that the market's always going to go down when we put the insurance on, but at least it gives you an opportunity to lock in a price before the market opens and get yourself protected if you need more protection. So good call outs there. I have a feeling that we are not done with the excitement in the cattle market based on the last 2 weeks. And you can bet that we at ProAg will keep you informed on what's going on the best we can on the Cattle Talk podcast and through lots of our ways of communication to you. So, Nick, thanks for coming into the podcast studios today, and have a great weekend.
Thank you, Lucas.